is the Fed going to throw the US economy into the trash? Is it going to stay the same? What's going to happen? So, this is my personal take before this all is going to happen. So, we're going to go over three scenarios, then we're going to see what some bankers are saying, and then we'll see what you guys are thinking. So, there's a poll right up right now if they're going to raise the interest rates or lower it or whatnot. And I'm curious to hear what you guys are thinking. So go and vote. And let's go over the three scenarios first. So the first scenario is interest rates lowered. So if the Fed would lower interest rates. So a continued decline in inflation, slow economic growth, and an increase in unemployment. If the interest rates are lowered, that's what the conditions would be. The impact, it could lead to cheaper borrowing costs and a potential boost to consumer spending and business investments, right? Interest rates remain the same. That's option number two, a balanced economic growth and stable inflation. The impact, this would result into consistency in borrowing costs and stable investment returns. So now we get into the third one. If interest rates are raised, right? Persistently high inflation and a robust job market impact, this could result in higher borrowing costs and a potential slowdown in economic activities. So all these three options are on the table. I don't think that they're going to raise it. I mean, that'd be crazy. Then they're just so out of touch with reality. It's not even funny, right? So before I give you mine, let's listen to the Three Stooges, what they're going to say. So Goldman Sachs predicts a potential for a rate cut in the second half of 2024. Inflation continues to decrease. Morgan Stanley predicts rates are likely to remain stable for most of 2024 due to mixed economic signals. JP Morgan predicts that there is a possibility of rate hikes if inflation does not decline as expected. So these are bankers that work in the sector. Can't really do much. These are the sources that I got. And now let's go over some facts. So, U.S. inflation rate of July was 3.1%, a decline from 4.2 in 2023. The unemployment rate is at 4%, which has remained relatively stable to the previous year. GDP growth is projected to be a moderate 2.1% for 2024. The Federal Reserve increased interest rates to a range of 5.25 to 5.25 through 2023 in efforts to control inflation. So now, what are you guys' opinions? Because I think interest rates need to come down. I think just a slight tick to get people jobs back, to get borrowing costs down. So lower interest rates will give people a little breathing room. Will get, it's going to ease up lending. It's going to decrease mortgage rate. And so it's just going to be easier for people to actually go out and get a loan, get into a house, because you guys did a poll and it's actually surprisingly how many people actually are ready to buy a house. Here's the poll. When interest rates are going to come down. So I thought it was surprisingly, I didn't think it was that many. I thought about 5%, maybe 10, but you guys are kind of ready to buy. I didn't think that so many people were ready to buy a house, actually, because it's actually kind of harder to qualify for loans when there's so much turbulence going on and, you're unemployed and whatnot. So when you invest into savings and all that kind of other stuff, lower rates can reduce your savings and it will make the borrowing cheaper. So if you have saved money, all that kind of stuff, it's going to be harder to do that. But I don't think that a lot of people of you guys still have money saved up, even though you guys said like an overwhelming percentage of you guys said you have over $25,000 in savings. I will call BS on it. I think there's a few of them. Maybe you have assets that are over that. Maybe that's what I had to say. But not all assets you can sell and liquidate in an emergency fairly quickly besides stock, because most of them are just, are like if you own real estate, it's not that liquid. You can liquidate it, but depending on how long it's going to sit on the market, and with the data out there, the 20% or 15% fall out of the contract because of who knows what. It's just not looking good, right? So I think interest rates are going to have to come down, like I said, and not by a whole lot, just a little tick to just say, hey, we heard you guys, the markets can't do it. And I know you guys been screaming interest rates should go up to, double digits because you guys want house prices to be back to 100,000. And I don't think that that can happen, because if you're going to if you would look at the default rate of all these loans out there, it would just, commercial real estate that, that have arm loans on it, you would basically destroy it. And other companies that also have loans to fund their businesses, it, it would basically deteriorate everything. If we'd have interest rates that high again, it would even bankrupt the United States. Because I've seen articles out there that we're paying more in interest now than we spend on national defense. And this is like the first time that interest payments that the US government needs to do is higher than the national defense budget. And it's crazy when you think about these numbers on interest payments and all that. It's just mind-boggling. And I know you guys been struggling because you guys been looking for jobs, doing all that, and it's just crazy when I see people cannot get jobs. And for me, it's always coming back to jobs. It's always this whole circle of kind of economy, all that comes back down to income. And when you circle everything back to income, is you need to generate revenue, right? Even though we can print money out of thin air, most Americans do need to work for their money. I'm included in that. I need to work for a paycheck. I cannot just open my hand and say, let me get $1,000. It just doesn't work like that in most case scenarios, right? So now that's why I'm like telling you guys, you need a good job to get ahead. I just ran numbers and I just got my car insurance renewed, and my yearly premium now for my 2019 Ford Mustang and my Polestar is about $5,000. So I'm looking at it like, oh my gosh, it's 5 grand. And then I'm looking at my homeowner's insurance, that's about another $1,600. So that's $6,600. And then I'm looking at health insurance, that's another few $1,000s. So I'm looking at $10,000 in just insurance costs. And I haven't eaten, haven't done anything. And when you are living, in the United States, you need to make money. It's just that simple. And what's the best way and easiest way to do money is work, right? So I know that there's going to be like people are in the comment section going to be, haha, you can make money doing other stuff, or do OF and do all this kind of stuff. Yeah, but it is not that easy. And when you read other comments of my videos, it is quite hard to actually make a dollar. And when you actually make that money, it is taxed to no end. And it is so difficult for the normal Americans that some of you guys don't even understand. So it is super, super interesting to see how people from different backgrounds that are actually way, way more fortunate see upon other people that are less fortunate. And sometimes my videos, I'm just like, we just got to be more lenient and more tolerant of other people, because just because you're doing good today doesn't mean you're going to be doing good tomorrow. There were some real unfortunate stuff happens to people, and these people are also humans and are also fellow Americans, and you should probably be a little bit more considerate, because you never know if you say something stupid and you then get fired over that, and they record you and you have a crisis and you can't get another job because you're just a meme on the internet, right? You wouldn't be the first one that happened to. So, and that all relates back to income. Income is your biggest thing to outpace inflation, to outdo it. And when I'm looking at all these costs that are happening, it is crazy, 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 crazy how expensive mortgage payments are, car payment are. Everything else is so expensive. And I have an a graph right here showing how much prices actually went up in the last 4 years, right? So let's go over the first one. So this was on Fox Business. I watch that sometimes for market updates, and so they did a study. So consumer pricing of foods have gone up by 19%. I thought it was about 20%. So I do think that that is an accurate number because that's exactly how much I thought food went up to. Gas went up by 50%. It, and I always known that Nevada is next to California and it's so expensive in gas, but this is like a national average. So this is credit card debt. So credit card debt has went up to 40, has increased over the last 4 years to 45% increase in credit card debt. And now the thing that matters most in this whole chart is the hourly wages are down 1.9%. So the only thing that should be up now is down. The 30-year mortgage rates are up 148% from 4 years ago. And groceries are up 20%. So, looking at all this, this should all be reversed. This should be negative 20% consumer pricing, negative 50% gas, negative credit card debt 40%, and the hourly wage should be a positive, not a negative. And mortgage rates come down and groceries also come down. So now I'm looking at it. The only thing that should have kept us up with the hourly wages should have also been up is down. So it is really, really brutal. And now I'm going to transition into a little bit what some of my viewers said. Teach these people how to do, how to start a business so they can live and do things the right way, right? So they can be their own business owner, because business owners are the great things, are the way to go, are the future, are you got to do it. You got to stick it to the government and become a business owner. Being a business owner is stressful, especially being a small business owner. If you're a business owner and you can get 15 to 20 people hired, you're going to be better off. But unless you reach to that market cap of making a few million a year in gross sales, you're going to be sweating. You're going to be sweating. You're going to be laying at home at night, not knowing, if you can pay bills, if your house is going to go up for mortgage, foreclosure because you can't pay the mortgage. And I personally do not advise people to take the entrepreneurship route. It is really brutal. I think if one of you works full time, the other person can do the entrepreneurship route. If both people want to delve into entrepreneurship, it's brutal. It's a brutal journey. It can be fulfilling like crazy, but the startup costs are immensely because you need to sell assets to start it. All businesses need capital. So and these people that say, oh, if you don't need, if you're not gonna, there's businesses out there that you don't need any money for. If you don't need any money for it, then why isn't everybody doing that business? And why, who has a corner on the market? So coming up with a business to outdo this is most of the time not the way. What I'm thinking, most of the time, it's the best thing to actually do is educate yourself and get more certificates and be a better and get better training from your job and actually be a more diverse um you know background and all that kind of stuff, so you get hired more quickly and do stuff like that, because doing entrepreneurship is so brutal. And me and Ali did it, and man, it has months where you're making tens of thousands of dollars a month, and you're like, how can this ever end? We're living on top of the world. And then you have months where there's just 1 month, 2 months, and it's just not trending in the right way, and you're staying up till 11 o'clock at night brainstorming why am I not making this much? I did it before. Why can't I close these people? Why are they going with my competitor, not me? I offer such a better product and I offer such a better service. And it is really, really crucial. If you do this, that you have enough funding, that you're an expert at it, and that you're going to commit it to the long run. If you can stick with it for a long enough time, you'll be successful. But it's a high failure rate. And so, do I recommend it? Yeah and no. It's really, really, really dependent on you. What you want out of it, how much dedication are you going to do, and all these kind of things, and where you're doing it and what you're doing. So, yeah, brutal, 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 brutal. So, do better skills, do better in at your job, and trying to pick up side gigs. And then if you can make enough with these side gigs to, do it, then swap over. And for these people that say, oh, just become an influencer, those times to become an influencer, you needed to start to be an influencer 2 years ago, 3 years ago. And even now, there's no brand deals, there's no ad money in it, there's no big money that companies are willing to spend on marketing. When you look at it, there's just no company is throwing around marketing dollars like they used to. I remember during FTX boom, they were paying influencers $25,000 to do ads for them. And now, you're getting, or me and Ali, with hundreds of thousands of followers, are getting ads for $300. Hey, do you want to do $300 ad? It's like, no, it's not worth to dilute the audience or to extract value out of the audience for $300. It's just not worth it. AdSense on YouTube doesn't pay. No, it's just everything is really, really tough. And so, yeah, let me know what you guys think, because it's not that great. And when people tell me, oh, you're just a doom and gloomer, let me know what industry you're in and what neck of the woods you're in, because I'm curiously interested to see where you're from. But all these people that I respond to trying to have a conversation never respond back. So they're like they type up one comment, be like, my industry's booming. Then I respond, what industry? And you just don't hear back from them. So I don't know if they didn't read the messages or whatnot, but yeah, it is not that easy during these times. And I think it's going to get easier once they're going to lower interest rates in September or tomorrow or today, depending on when you watch this. And yeah, I will be probably going live tomorrow night and talking about it. I will watch it. We will see. And I hope you like this video. Let me know what you think. I'm always trying to improve these videos, trying to improve one or two things every day while I'm walking. I always need to get my walk in. And yeah, let me know what you guys think. I'm ready. I'm ready for whatever. So yeah, this was it. If you haven't, please go follow and like and follow me on LinkedIn if you haven't. I do reshare and post on LinkedIn, so give me a follow on there. I'm also on Rumble, Spotify. Haven't been posting there in the last 2 days. I've been working on some other stuff, on some real estate projects. I will share these with you pretty soon. Once I'm over there again, I will show it you what we're doing. And let me know what kind of questions you guys got, so I can answer those. I really appreciate you guys, especially my originals that always watch my videos and comment. I see you guys, and if you watch this and you always watch my videos, just drop a comment below and be like, yo, like drop an emoji. Just drop like a funky emoji so I know that you guys are the originals. And this was it for this video. Love chatting with you guys. You guys are amazing. And I will see you in the next one.